Hi folks, it's Andy Thomas here from Abacus Jack. Today we're going to be busting all the myths around borderline vehicles and how they're used in businesses and how the company car tax rules work. So in our last video we covered all of the key points around buying or leasing a car through your company. We looked at how the different types of vehicles are treated differently and the pros and cons of running a vehicle through a business. But one question we get asked all the time is around these so-called borderline vehicles. So if you buy a Land Rover Defender or a Ford Transit Custom, how does this work in terms of company car tax? We're going to get right into the detail of these vehicles. All of these cars and vans, they might look like a car, but actually, how do HMRC see it? How to avoid some of the misleading marketing information that comes from the manufacturers who might tell you it's a commercial vehicle, but actually it isn't. And we're even going to focus on specific vehicles like the Land Rover Defender or camper vans or the popular double cab pickups. All these types of vehicles can be tricky to navigate. So in this video we'll explain what HMRC is actually looking for, what do the rules say, and what to watch out for if you want the best tax treatment. Before we jump in, I must caveat this video and say that this is my understanding of the rules. It's my opinion. I don't have access to any information that you guys can't also access, nor do I have any special guidance. We read the same tax manuals as everyone else, and this is how I interpret it. So you might have a different view to me, and you're welcome to share that in the comments. So let's jump straight in. First of all, let's talk about why the type of vehicle matters. Well, put simply, it comes down to tax. If your vehicle qualifies as a commercial vehicle in HMRC's eyes, then you can get 100% capital allowances, you can claim VAT back, and there could be little or no benefit in kind tax. If it's not a commercial vehicle, you might get hit with a higher tax bill, personally and through your company. So we're going to start by looking at the actual rules. For tax purposes, all vehicles are treated as cars unless they tick one of these three boxes. Number 1, it's a motorbike. Number 2, it's constructed primarily to carry goods or a load. Number 3, it's a vehicle not commonly used or suitable for private use. That's it. Those 3 points are what HMRC apply to determine how a vehicle is treated. In other words, it's how the vehicle is built, not what you use it for. So even if you're only using it for business, if the construction of the vehicle doesn't match those rules above, it's going to be treated as a car. In this video, we're going to call out some typical examples related to the sorts of questions we normally get. So if we look at combi vans and crew vans, these look like vans, but often they have a second row of seats and a second row of windows that sit behind the driver. So HMRC will ask, is this primarily built to carry goods, stroke load, or primarily people? You can already see this is a tricky area, it's a grey area. So the way to look at it, if the load space isn't clearly bigger than the seating area, the vehicle, in other words, is equally suited for passengers and goods, then it's likely not to be classified as a van. So just having 2 rows of seats doesn't mean it fails, but if the dominant area isn't for goods, you're going to be on shaky ground. Now the big one, the Land Rover Defender. We get asked about this all the time, and specifically it's the commercial version that we get asked a lot of questions about. This commercial version has got no rear seats, it has no rear windows, and it has a large load area or a dominant load area. Now because it's clearly built for cargo, not for comfort, there's a strong argument in this case that it will meet that second rule I mentioned. In other words, it's constructed primarily to carry goods. So yes, in many cases, this version of the Defender could qualify as a commercial vehicle. But we've got to be really careful here because that's just one version. What about all the luxury versions of that same car? They've got heated leather seats, probably even things like champagne coolers. You're not going to be able to justify these as anything other than a car. So you've got to be really careful how you interpret manufacturers' brochures. Land Rover will always tell you they make commercial vehicles because the heritage of the brand is just that. But if it's a super luxury car designed to predominantly carry passengers, it's going to be treated as a car for tax purposes. We have to apply common sense. Now let's have a look at the double cab pickups. These have been popular with business owners for many years, and historically the double cab pickup has had an exemption. But the rules have changed. From April 2025, double cab pickups are now judged in the same way as other vehicles. If it's equally good at carrying passengers, then it's probably going to be treated as a car. Whereas in the past, you did have an exemption and they were classed as commercial vehicles, but be really careful you're not going to be caught out by these new rules. Another tricky one is converted minibuses. So a regular minibus will probably pass that third test that I mentioned before. In other words, it's not commonly used as a private vehicle. You might even need a special license to drive it. And that in itself is an indication that it's unsuitable for private use, so it would be treated as commercially. But what if you're going to convert that old minibus to a camper van? Well, it's likely those restrictions are going to disappear. It's now suitable for private use, and HMRC will therefore want to treat it as a car. So if you're looking to buy one of these so-called borderline vehicles and you need to talk to an accountant about how it's going to be treated, then please get in touch. Remember, we're going to look at the spec, not the purpose. Does it have rear seats? Does it have rear windows? What's bigger, the load area or the seating area? What does the manufacturer call it? Does it call it a commercial vehicle or a van? That's not necessarily always going to mean it's treated in the same way for tax. The more it's built for cargo, the stronger your case is going to be. But if it's got the creature comforts and the kids love it for camping, that's going to be a sign it could be a car. So to sum things up, tax on vehicles depends on how they're constructed, not necessarily how you use them. If you're thinking of buying something that might be borderline, please ask for advice first. We help clients with this stuff all the time, from crew vans to defenders to pickups. If you've got a specific vehicle in mind, drop us a message and we'll give you some information on how we interpret that. And don't forget to like and subscribe to our videos for plain English tax advice. Thanks for watching and see you next time.